everyone. In this presentation, I am going to discuss the topic alteration of share capital and internal reconstruction. This is prescribed in the syllabus of corporate accounting, BCom semester 3, G&D. First of all, meaning of internal reconstruction. Internal reconstruction denotes reorganization of capital structure of a company without its liquidation. Hence, no new company is formed. In fact, it refers to an internal arrangement that gives a new look to the capital structure, adjusts the right of the various stakeholders, that is, shareholders, debenture holders, creditors, along with the adjustments in the values of assets and liabilities of the company, and eliminates fictitious assets forming the part of balance sheet. Now, features of internal reconstruction. The main feature of internal reconstruction is that no new company is formed and no liquidation of old company takes place. The necessary corrections are made in the balance sheet of a company to give it a new form. The necessary corrections are made in the asset side of the balance sheet involving removal of useless untangible assets, accumulated losses, and correct valuation of tangible fixed assets. The liabilities are also altered by the way of compromises with outside parties. Now, methods of internal reconstruction. There are different methods for internal reconstruction. These are alteration of share capital, which is covered under Section 61 of the Companies Act, reduction of share capital, Section 66, variation of shareholders' rights, Section 48, compromises and arrangements, Section 230, and surrender of shares. Now, in this presentation, I'm going to discuss one method of internal reconstruction, that is alteration of share capital, that is covered under Section 61. Alteration does not involve reduction of share capital. Various legal requirements have to be fulfilled by the companies before doing this alteration. These are: a company may alter the capital laws of its memorandum only if it is authorized by its articles to do so. An ordinary resolution must be passed at a general meeting before doing the alteration, and a notice specifying alteration made must be given to the registrar within 30 days of alteration. After fulfilling all these legal requirements, a company can go for alteration of share capital. Now, there are various methods of alteration of share capital, that is, issue of new share capital, consolidation of shares, subdivision of shares, conversion of fully paid shares into stock, conversion of stock into shares, and cancelling of unissued shares. So all these methods are being discussed one by one. First of all, issue of new share capital. As a part of alteration of share capital, a company may increase its share capital by issuing new shares. These are simple issue of shares, that entries that are done at the time of issue of shares. Various entries are done assuming that full amount is payable on application. First entry is bank account debited to share application and allotment, and then share application and allotment account debited to share capital. These two entries are done at the time of issue of new share capital. This is one of the method of alteration of shares. Next is consolidation of shares. It means conversion of shares of smaller denomination in shares of larger denomination. In this case, the paid up share capital of the company remains same, but the numbers of shares is reduced. For example, if a company had issued 10,000 equity shares of 10 each, then these shares can be consolidated into 1,000 shares of 100 each. Here, the amount of capital will remain same, that is 1 lakh, but the number of shares will reduce. So entry will be share capital account debited, share of smaller denomination will be debited, to share capital of larger denomination will be credited. So old capital will be debited and new capital will be credited. Entry is share capital account debited to share capital account. Now, next method of alteration is subdivision of shares. In this case of subdivision of shares, shares of larger denomination are converted into shares of smaller denomination. This is just opposite to the consolidation of shares. In this case, the total amount of share capital does not change, but the number of shares increases. Here, for an example, if a company had earlier issued 1,000 equity shares of 100 each, then company can subdivide those shares and it can become 10,000 shares of 10 each. So entry will be share capital account debited of rupees 100 to share capital account debited of rupees 10. So old capital of rupees 100 will be debited and new capital of rupees 10 will be credited. Here also the share capital amount will remain same, that is 1 lakh will remain same, but number of shares will be increased in this case, in case of subdivision. Now, next method of alteration is conversion of fully paid up shares into stock. As we know, we can convert the fully paid up shares into stock. So this is also one of the part of alteration. And fully paid up shares can be converted into stock by doing the following entry: share capital account debited to capital stock account. Here, amount of capital will remain same, just it will be altered from share capital to capital stock. Next method is conversion of stock into shares. The equity stock of a company can be converted into equity shares as well. So entry will be passed: equity stock account debited to equity share capital. So here also capital will remain same, but it will be altered from stock to equity share capital. Then last method of alteration of share capital is cancelling of unissued shares. No accounting entry is required to be passed in this case. The authorized share capital gets reduced by the amount of unissued shares now cancelled. This is the diminution of share capital and it should not be confused with reduction of share capital. For example, a limited company with an authorized capital of rupees 50 lakh and issued capital of rupees 40 lakh can alter its share capital to authorized capital of rupees 40 lakh and issued capital of rupees 40 lakh. In this case, no accounting entry is needed for such cancellation. Only reduced authorized capital is to be shown in the next balance sheet. So this was all about the alteration of share capital. All these methods can be followed by the company while doing the alteration of share capital, where the form of capital is changed from one form to another, but reduction, this is not the reduction of the share capital. So this was all about the alteration of share capital. Thank you all.